Hello and happy June 18th. It is Thursday. Welcome to another exciting edition of Rate Desk. I am your host, Michael Thomas, here to talk about multifamily interest rates. Boy, do I have some news there and other news. First, going to the markets, the sessions ended mixed today. Dow Jones Industrial Average down a little bit. The S&P 500 and NASDAQ are up. We saw the crude oil futures jump into $39 barrel range. That's good to see that there. On the U.S. 10-year Treasury yields, they did come in a little bit, about 2 basis points from yesterday, trading around 71, that is 0.71 today. Now, the very exciting news today is that I locked an interest rate on a 223F, that's a refinance transaction with HUD FHA insurance at the interest rate of 2.33. That is 2.33%, fixed for 35 years, and of course, non-recourse. Client was very happy. We were very happy. In fact, it is the lowest interest rate in our company's history. How interesting is that? This company's been around 65 years. So what does that tell you about where permanent interest rates are today? Time to call that lender, get those loans done. Wow, that is incredible. I don't know if we'll see rates this low the rest of this year or not, but certainly a fantastic outcome on that transaction. Jumping over to 221 D4 rates, getting some quotes and bids around the 3.125, 3 1/8, 3.125 range. Also just excellent to see 40-year construction rates that low. Going on over to the agency desk, not seeing major moves on Fannie, really trading pretty similar to yesterday at the 290 range, fixed for 10 years. Freddie Mac is getting more aggressive though. They want more business, so they are coming in a bit on their interest rates. They shaved off about 4 basis points from yesterday. Those rates are quoting at 306 today. That is on the Freddie Mac 10-year fixed rate. Now, what I want to talk to you about today. Okay, you might notice my surroundings are a little bit different. That is because I'm in my actual office. Remember when we used to work in offices instead of working from home? Well, I came into my actual office today, and boy, do I feel like a stranger here. It's only been a couple of months, but it does feel different to be here, and that is all over the news today. A lot of questions about workers continuing to work from home. There seems to be quite a large percentage, according to one survey, over 40% of people that would like to continue working from home. So that's an interesting statistic to pay attention to, and kind of ties into what I was talking about yesterday in the episode about suburban and built-ins and having those home offices. That could become a really key thing in the future moving forward. Other point I want to bring up is, when are those construction prices going to come down? Okay, if you think about the 4 commercial food groups, we got retail, office, industrial, and multifamily. Okay, how many people are building brand new retail centers right now? Crickets. How many people are building new office buildings with maximum square footage? I don't think that's a super popular category right now. My point is this: we should see some pricing compression in the construction markets, which would benefit multifamily developers. When we see that, combined with these incredibly low interest rates, folks, it's the time to build, okay? It really is the time to build. It is a very ripe market for financing right now. I'm not saying it's easy to get deals done. It's not. It is difficult. However, there is a gigantic carrot at the end of that stick, and that carrot is incredibly low interest rates you could be one and done with and move on. So that is my tip of the day. Keep an eye out for drops in construction pricing. Continue to think about the work from home we mentioned previously, and also really look for land and start building. This has been another edition of Rate Desk. I'm your host, Michael Thomas, signing off.